Hey there, folks, where we talk about the latest news in Ireland, as well as real estate and investment trends. Today, let's dive into why Ireland's housing market is hitting the pause button for many large investment funds. It's a complex issue with multiple layers, and we're here to unpack it all for you. This opinion comes directly from Kennedy Wilson, a major player in real estate investment. They have a significant presence in Ireland, so their opinion is invaluable. First, let's talk about the big picture. The Irish housing sector is currently facing a number of serious challenges that make it less attractive for large-scale investments. From rising construction costs to stringent regulations, the landscape is becoming increasingly difficult to navigate. According to Wilson's CEO, the market has become unattractive for large-scale investments. Why? Well, this is largely due to rent restrictions and regulatory barriers, which turn out to be significant obstacles. Watch many videos on our channel about this, including how big funds are ready to get rid of a whole package of Irish real estate. These factors are throwing a wrench in the works for big investors looking to make a splash in the Irish housing market. Rent caps, in particular, are a double-edged sword. These factors are a serious obstacle for large investors who want to make a splash in the Irish housing market. In particular, the rent cap is a double-edged sword. The uncertainty they create is a major deterrent. Investors do not regulate their profitability. Now, about the maximum values of the rent. They are designed to increase housing affordability, right? But here's the catch: they create a lot of uncertainty for residential real estate investors. This uncertainty makes it difficult to predict investment returns. CEO Kennedy Wilson notes that it is precisely these limitations that limit potential profits and make it difficult to justify large-scale projects. In fact, it is difficult for investors to understand whether it is worth investing their money in a market where their profits may be limited. This is a serious deterrent for those who want to invest large amounts of money. Regulatory hurdles are another major problem. Navigating the maze of regulations can be difficult and expensive. For large investment funds, this means extra time, extra money, and a lot of additional problems. No wonder they are hesitant to get to work. The combination of rent restrictions and regulatory barriers creates difficult conditions for investors. But don't get me wrong, Kennedy Wilson is not going to completely leave Ireland. They still see potential in the market. Their opinion gives us valuable information about the problems faced by large investors, and this is crucial for policymakers and industry stakeholders who are trying to deal with the housing crisis in Ireland. Understanding these issues can help in developing more effective policies. So, what does this mean for the future? If Ireland wants to attract more investment, it needs to rethink its approach. The key factor will be the balance between the need for affordable housing and the interests of investors. Perhaps relaxing some regulatory requirements or finding a compromise on rent limits may make a difference. This could create a more favorable environment for investment and at the same time solve the housing crisis. So, this is the conclusion of today's review of the Irish housing market. Stay informed and stay ahead in the world of real estate and investments. If you found this information helpful, make sure to hit that like button and subscribe for more updates. Thank you for watching this video. Thanks for tuning in, and I'll catch you next time. Remember to like and subscribe.